Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Oklo.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave in the comment section below.
So let's get into the analysis.
Okay, so with Oklo, I think we have to start by just, grounding ourselves in what this company actually is.
Exactly. This is not about last quarter's earnings. We're talking about a pre-revenue development stage company.
Right. The entire thesis, the whole story, is about future infrastructure. It's a build-out play.
It is. It's about building these advanced nuclear microreactors and locking in those long-term power contracts that come with them.
And this is where it gets really interesting, because the target market here is it's massive.
It's the AI gold rush. We're talking about AI data centers, hyperscalers.
Yeah, and that's the whole engine behind this story, isn't it? They are completely focused on this market.
Because that's the choke point for AI right now. Power. Reliable, dense power.
And when you look at their pipeline, it's not just some vague idea. The numbers are huge.
Over 14 gigawatts in the customer pipeline. That's not just, casual interest.
No, that's serious industrial load potential. The kind of customers who need power that absolutely cannot be interrupted.
And management is painting a very, very ambitious picture to go along with that demand.
Ambitious is one word for it. They're targeting over $21 billion in revenue by 2038.
$21 billion. I mean, that is a number that's almost 15 years away.
So how much of that is real? And how much is just, projection based on approvals they don't even have yet?
And that's the skepticism you have to apply. But if they pull it off, the model itself is solid.
It's built on a fleet model and, more importantly, on those long-term power purchase agreements, the PPAs.
Exactly. The PPAs are the bedrock. That's what turns an infrastructure project into predictable, contracted cash flow for decades.
And we can already see the seeds of that. They have letters of intent, right?
Yeah, for 20-year agreements with big players like Diamondback Energy, Wyoming, Hyperscale.
So that's real market validation. It suggests they can become this high-margin energy provider.
And it's a big if, they can actually build the reactors.
Which leads us right to their competitive mode. This is probably the strongest part of the bull case, the tech and the regulatory side.
It is. We're talking about their proprietary tech, the Aurora powerhouse in the Pluto reactor. It's all based on fast fission technology.
And the really fascinating part is the fuel source. It's not what most people think of.
Right. Most reactors use enriched uranium, Oklo's design. It can use nuclear waste.
Specifically surplus plutonium as a bridge fuel.
And that fuel recycling part is just a massive differentiator. It's not just about clean energy.
It's about solving the global nuclear waste problem, and I assume a huge cost advantage.
A huge cost advantage. Tell us a bit more about that, because that's where the landscape just completely shifts.
Well, this process could potentially slash their fuel costs by, say, 30 to 50% compared to conventional reactors.
30 to 50%. So they're not reliant on the spot price of uranium?
Exactly. It breaks that reliance. It gives them a strategic hedge that no of their competitors have. They're turning a liability nuclear waste into a competitive asset.
That's just brilliant. It's vertical integration built right into the design. But I think the real moat,
The regulatory lead.
that's what creates the massive switching costs for anyone else.
They didn't just follow the rules, they sort of helped write the playbook for these advanced reactors with the NRC.
And the speed at which they did it is what's so stunning. They got that principal design criteria approval in September 2025.
In just 15 days.
15 days. For older reactor designs, that phase can take, 15 months? Maybe longer?
Years of back and forth. They basically cut through years of red tape in 2 weeks. That signals incredible regulatory confidence.
And that accelerated path, plus their own IP, which has been validated with labs like Los Alamos.
But just creates this huge barrier to entry. If you're a competitor, you are looking at a multi-year lag just to get to where Oklo is today.
And you have that government validation, too. They were picked for the DOE reactor pilot program.
So it's not just a private venture. This has federal support, which adds a whole other layer of credibility on the technology and the safety.
Okay, so the bull case is incredibly compelling. You've got game-changing tech, a first-mover regulatory edge, and this massive AI-driven future revenue stream.
But every moonshot has gravity. We have to anchor this in the financial reality. Where does this all break down?
We have to talk about the bear case because this is a high beta story. There are significant risks.
And it starts with the fact that they are, today, a pre-revenue company. They are burning cash.
They're operating entirely on investor capital, the meaningful power revenues, the actual cash
We're
flow.
not expecting that until late 2027, maybe even early 2028.
That is a long time to wait, and any delay in licensing or construction is going to hit the valuation hard.
And you see that cash burn reflected in the earnings reports? The losses are significant.
Yeah, that Q3 2025 EPS loss of -20 cents. It missed estimates. But that's just the reality of a project like this. It's all R&D and licensing costs right now.
Which explains the volatility. The stock has been all over the place.
It surged over 300% in 2025, right? Purely on that AI power narrative.
But then we saw that huge drawdown, a 42% drop from its high, tied to market sentiment and some of that insider noise.
Let's drill down on that, the insider noise and the dilution concerns, because that's a big deal.
They have that massive $1.5 billion at the market equity program, the ATM.
And we should probably explain what an ATM program really is. It's not a typical offering.
No, it's flexible. It basically lets them sell shares directly into the market, bid by bit, whenever the price looks good to them.
It's like a capital tap they can turn on and off.
Which is great for them. It provides necessary capital. But for investors, it creates this constant nagging dilution fear.
A background threat of dilution that's always there, always putting some pressure on the stock price.
And on top of that, you had those huge insider transfers.
Yeah, the co-founders moving about 15.4 million shares into trusts. That was valued at, what, around $1.1 billion at the time?
The company calls it estate planning, not a sale.
And that's a key distinction, but it's still messy.
On one hand, estate planning suggests they're holding for the long term. On the other
hand, that's a huge chunk of shares that creates an overhang. And the headline alone can spook retail investors.
But here's the counterbalance, and it's a strong one. The balance sheet.
It's pretty strong for a company at this stage. They're holding about $1.2 billion in cash and marketable securities.
So they aren't desperate for cash, which is what kills a lot of these companies. That gives them a multi-year runway.
A runway to get through that long licensing cycle without having to hammer that ATM program when the stock is down.
Okay, so pivoting to the technicals. The stock seems to be finding a floor after that wild ride.
Yeah, it's been consolidating, clustering around that $70 to $76 range.
And analysts are seeing that as higher lows forming post-dip. It suggests institutions are buying in at these levels.
And the institutional confidence is really, really palpable. Institutional ownership is at 85%.
85%. That is a massive number for a company this volatile. It shows real long-term conviction from the smart money.
And it's the quality of that ownership, too. You see cluster buying from established firms. It's not just hype chasers.
So if they do hit their milestones, the upside could be pretty substantial.
Oh, yeah. Analyst targets are all over the place, but they're bullish. From $90 up to $175.
So let's talk about the near term, the next 3 months. What are the key events people should be watching for?
The next earnings report. Expected around March 23rd to 30th, 2026.
And just to be clear, you are not looking for revenue.
No, zero revenue. You're looking for licensing updates, cash runway status, and progress on those PPAs. Zero progress would be a disaster.
And then there's the big one, the really critical regulatory event.
The NRC draft safety evaluation, that's potentially coming in Q2 2026.
That milestone would be a massive de-risking event.
Absolutely. It would take that 2027 deployment schedule from a high-risk bet to something much more concrete. The stock could be fundamentally re-rated on that news.
And then you have the more speculative stuff, the chatter.
Always chatter about a DOE announcement on plutonium allocation, which would secure their fuel supply.
And of course, any news on formalizing those deals with the hyperscalers. Turning those LOIs into firm contracts, that would be huge.
So when you put it all together, what's the takeaway?
I mean, the core thesis is pretty clear. Oklo is a high beta growth story. It's sitting right at the intersection of the AI power boom and the nuclear renaissance.
And those current losses are just the cost of entry. There are R&D investments that are supposed to pave the way for massive contracted revenues down the line.
It's an asymmetric bet where that regulatory lead is their single most valuable asset.
It is. This is a multi-year hold. It's all about regulatory and commercial milestones, especially hitting that 2027 plant commencement target.
The key is understanding that this is an execution story, not an earnings story. The long-term prize is huge, but patience is required. If you're looking for that kind of asymmetric upside, keep watching those NRC updates.
Absolutely. If you found this look into Oklo useful, don't forget to subscribe, like, and share. Your support helps us bring you more in-depth stock analysis every day on Smart Wealth with Joshua.